Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. And if you are brand new to us, you would need to know you are tuned into our podcast, The Secret War on Cash. If have watched our podcast before, welcome back. Nice to have you. And in addition to having you, I have my co-host with me here today, Chris Agelastos. Chris, good morning. How are you?
Doing great. Not as good as Eric Sprott, though, the billionaire.
Yeah.
But I have aspirations, though.
Well, I mean, when you have the word billionaire in front of you, there's probably not a lot of people who are doing much better financially speaking. We don't know how the
Right.
rest of his life is going. I
Could
mean,
be morally corrupt, but I hear actually he's a pretty good guy.
when there's always life issues, but on the financial front, I'd say he's probably doing pretty good.
Yep.
And well, actually, that's a perfect lead in, so we can get into exactly how what he's doing. Let's say that not only
Yeah.
how he's doing, but what he's doing. This is from newsbreak.com. We have billionaire Eric Sprott put 98% of his $3 billion fortune in gold and silver and says gold is headed to $10,000 an ounce.
Yep.
Um, 98%, that's
Mhm.
that's a large percentage of one's um, holdings, to be clear. I
Yep.
mean, that goes without saying. And certainly that's not, in our business, our industry, we don't suggest anyone have close to that amount in their portfolio. However, as I read that headline and as I was thinking about it, Chris, when you really break it down, I mean, currencies, fiat currencies throughout the world, most everyone is of the belief that that world as we know it is not going to be the same. We don't know when, but many are leaning, it's probably not going to be the same sooner versus later. Let's say that to start with.
Right.
When you take that into account and then you start looking at, okay, well, what do you do with your money then? If you have money, you can't keep it in money. You have the stock market, you have land, you have cryptos, you have various ETFs and indexes. You know the whole list of things.
Hmm.
But at the end of the day, what I do understand about where he's coming from is, and again, he's saying this and talking about gold, which is less than 5 grand an ounce now, going to 10 grand an ounce. But more importantly, the physical nature of this asset alone is, in my opinion, is what would really kind of substantiate him doing what he's doing.
Yeah.
Because at some level, uh, I don't believe, again, the fiat world is it's suggested is going to be collapsing. The crypto world, the digital currencies, et cetera, as much as there's been a lot of profit and gain made there, and there seems to be a lot of viability to it, at the end of the day, we've already seen enough evaporation, we'll call it, take place with people losing what they have there. So it begs the question, okay, what could you put your money into that is going to, maintain some sort of wealth preservation and potentially give you some growth? And that's where I think I understand the move, even though it
Yeah.
is a very aggressive one.
Yeah. Well, and they also point out that he's made a lot of his, or at least several of his billions, so the bulk of it, through 40 years of investing in gold and silver in various forms. So it's not like he's a rookie, right? I mean, he knows this market and he's known it for decades. But
Right.
that, I believe, is what gives him extreme credibility, right? This isn't somebody that just came in and dumped some money in gold a year or two ago, and of course, the last 2 years have been phenomenally good for gold and silver, and just made a quick buck, and now he's telling everybody, hey, that's where all my money is. That's where some of these crypto guys are, right? They got into maybe Bitcoin or some of the other cryptos really early. Maybe they didn't even have a lot of money, but all that they had was in it. And then the rocket ship took off, and they made a ton of money. No, he's somebody who's been doing this for 4 decades, or I believe they said a little more than. And so he knows what he's doing, and he's looking at all the same fundamentals that we talk about a lot on this program. Government debt, currency debasement, inflation, weakening confidence in fiat, or paper currencies. Obviously, you got then the central bank buying, countries looking at reducing some of their dependence on the dollar. All of these different things. It's not like it's just one thing that has been pushing precious metal prices up, and of course he's not the only one saying 10,000. I mean, there are a lot of analysts out there saying $8,000 to $10,000 gold in just the next couple of years. So, so it, when you hear the 98% and the 10,000, and you don't know all of the meat behind it, it can sound a little extreme. But once you get through all of those bullet points and all of those factors weighing in, all of a sudden it sounds like maybe he actually knows what he's doing.
Right. Well, and that's something that, you talk about the number of years, decades that he's been doing
Hmm.
this. It makes me wonder if part of his strategy is incorporating the fact that, he's got a lot of money on the table right now from the profits that are already there. So, even with any kind of a pullback in gold, it really doesn't per se take away from the fact that he's already made some enormously successful gains in the market. But you
Right.
touched on central banks, so let's look at our second article here,
Hmm.
and this coming from Economic Times. In fact, this is from the Economic Times. I think India Times is what it also is. Secondary title on it. Anyway,
Yeah.
nonetheless, the title of the article: Goldman says central banks wants more gold for their reserves. Now, this is not, it's interesting Goldman's weighing in on this, because this is
Hmm.
not like, I read that the headline, I'm like, this is like, it's about as common knowledge as the day is long at this point,
Yeah.
because gold, central banks have been gobbling up gold for I mean, they always kind of have, but in the last few years in particular, getting close to, I think, 3 or 4 years now, Chris, they
Hmm.
have been buying it at record rates and paces. And we talked about that in that fact on other podcasts, where even as gold went over 5 grand an ounce and had its
Hmm.
little bit of a pullback, and there's been other this podcast started 2.5 years ago, give or take, and we had gold at less than 2 grand an ounce then. And so even
Hmm.
at a pullback level today of we'll call it the mid 4,000 range, it's still doing considerably well from where it started, even from the time of this podcast. Forget about years prior to that. Bottom
Yeah.
line is, nowhere in this period of time has there been really much of a let up whatsoever by central banks. And in fact, the part we talked about, excuse me, I should have gotten this to this sooner, is that as gold prices pulled back, went over 5 grand, pulled back under 4,500, not only were central banks still buying, but they were buying even more so. And
Yep.
so this is something that, it's not really new news, but the point is, it's happening. And for those people tuning in or looking at, the market and whether or not they should be getting into gold, between what we, just talked about with Eric Sprott, and then what you see with central banks and institutions out there, this is a not only for people who have retirement savings and are doing investing. This isn't just a maybe situation. This is a must at this point, that you get diversified into physical metal.
Yeah. Well, and I think if people see, like, okay, in the first article we talk about Sprott and what he's doing. Well, here the central banks, not only, like you said, have they been buying for a while now, but they have doubled. So they've gone from 29 tons um, in an average per month of buying gold, 29 tons a month, to over 60 tons per month in 2026. So, and that's just over, I think it's about a 1 to 2 year time frame. They have doubled the amount that they are buying. And so if the central banks are doing that, right, there's a message in that. And Goldman, let's face it, the bulk of their business is not working with physical assets, right? So this isn't necessarily their specialty. They're not the people to always come out and praise precious metals and other commodities, but even they can't ignore it, right? And so for them to be saying that, before the end of the year, which what we're almost in June here, that we should see $5,400 to $6,000 gold when we're in the $4,500 range right now. That's a big deal. And these central banks, again, this isn't just something they're doing on a whim for the last few months. They've been ramping this up, and they are looking for protection against geopolitical risk, right? All the wars we have going on around the world, and shifting power structures, inflation, which is hitting a lot of nations, not just the U.S. And they're also trying to reduce their dependence on the dollar. I almost said get rid of the dollar because I do think that's maybe their ultimate goal, but really what they're wanting to do is reduce their dependence. They don't want the U.S. using the dollar to pressure them into different types of trade deals and things like that. So this is not just a fluke. I mean, they say here, there could be little short-term pressures, like when we see a dip in the stock market, you usually see precious metal prices come back a little bit temporarily because people need liquidity, but then it bounces back up. And they're essentially saying here that, look, anytime you see one of those little dips, that's a buying opportunity because this is going to continue.
Well, and you mentioned a point about the not being dollar dependent. They really have to get rid of the dollar, in my opinion, anyway. And the reason I say that, Chris, is because all of those BRICS nations, just them as an example, that are dumping dollars right now. If central banks hold on to those dollars, you can't have countries dump our dollar like they've been doing and not ultimately have some form of an adverse effect on the
Right.
value of that currency. So it really leaves them no choice. And it speaks to the fact that, what many experts are talking about, what many analysts are talking about, is that this is one of the reasons why fiat currencies, not least of which being the dollar, and their future probably do not have much of a long future ahead of it. So,
Yep.
nonetheless, for those of you tuned in, if you are wondering how do you learn more about gold, how do you get in, how do you get into gold? Is it complicated? Not at all. It's very easy. All you have to do is call our number at 1-800-289-2646 or text 1-800-289-2646. Or you visit us online, www.swissamerica.com. We will get off to you some information, free information, explaining the market to you, answering questions that you probably have or maybe didn't even think you have, but you will. And once you look at that, if you have the need at that point, which I believe you will, to take that next step to get involved in the marketplace, one of our representatives can help you do that. So if you haven't contacted us before, do it now. Or even if you have contacted us before and you want to find out more about what you can do to get into gold, contact that phone number, text that phone number, or visit us online. All right, thanks for tuning in, Chris. Thanks for the information. And if you're not subscribed to our podcast, please do so, as we'd love to talk to you more in the future. Have a great rest of your day. We'll talk to you real soon.
Take care.